Okay, so very good morning. It's Monday the 18th of December. Hope you all had a good weekend. Get your Christmas shopping in. 1 week to go before markets will wrap up really for the rest of this year. So what I wanted to do is just have a quick recap of some of the major news events which have occurred. Really the end of last week. We've got to talk about the tax reform stuff first. And then we'll have a look at some of the other overnight news and a couple of things to look out for in the week ahead. So first up, we just have a look at the S&P here in center right. Again, a bit of a change up. I'm on a different station at the moment, so if you're seeing black charts instead of normal white charts, then don't worry, it's me, not you. Now, looking at the S&P here, obviously we had a really powerful rise, not only overnight in Asia, pushing us up to, I mean, it seems like only a matter of time before we hit this 2700 level, but really it was Friday's session, you can see here, where equity markets in the US took a really decent move to the upside. If I just have a look at the Dow, same case. This all coming on the back of the tax plan. If you remember at the time we were trading those headlines late on Friday. Consequently, looking at the US 10-year, we are down this morning, just on the bottom right chart here, about 5.5 ticks or so. Nothing huge, but equity markets continue to remain pretty resilient. The thing that was going on Friday was, if you remember Thursday night, it was Senator Rubio who was at the time against the existing plans in terms of the Republicans' version of the tax bill, but Rubio and Corker did change their minds and back the bill in the latter part of the session. In terms of timing then going forward, again, this looks to be pretty much a done deal now, hence this, today's market price obviously based on forward expectations, and hence the reason why we've had this really strong move in the equity market. So timing wise now going forward, the House will likely vote first. That's expected on Tuesday, and then the Senate votes will be later in the week, still yet to be determined on what specific date and time that will be held. But looking here at the DAX then, following suit, we've had a pretty strong gap higher this morning, and we're just retesting up at around these levels here. And I guess if we start looking longer time frame, it's a fairly significant level we're testing this morning in the DAX. I'm just looking here, that was that previous high we had at the beginning of the month. Any break above there, you can see here that was that previous, when we gapped up on the 1st of November, but you can see here back on the end of October, and also what would have been the 8th of December. This is the third test of that level, so things looking fairly positive. I'd say the balance of fundamentals is enough here to potentially see a break of that, but it's been fairly significant thus far, so definitely worth monitoring the price action here. On the upside then, not a great deal until we start getting to the upper bound of the record high territory type levels, which would be more around the 13,500 type price point. So just keep an eye on the DAX just even while I'm doing this briefing here. We've tried to break it but failed thus far, but a significant level there to watch. So that was the tax plan side of things, but let's have a look at some of the news that's occurred from overnight. And first of all, let me just bring into shot Theresa May. So can't really go a weekend without reading plenty about the Brexit situation. So a couple of things I want to share with you. This is the article I sent out to you guys this morning. So May risks Brexit row over immigration, or over migration and trade during transition. So one thing to look out for is that Theresa May will set out her plan on how a proposed Brexit transition period will work, stoking a potential new row with the EU. She's going to be addressing Parliament today at 3:30 London time. So I don't think that's on your calendars, so you'll need to add that to the schedule. 3:30 PM, you've got Theresa May speaking. One thing then with Brexit in focus, looking at the pound, I saw this at the weekend, so thought I'd share it with you now, is the pound over the course of December thus far out of the major G10 currencies is the worst performing so far. Now, one thing that was probably more interesting over the weekend was this, and this came out in the Independent, and it was a BMG poll which came out on Saturday, and essentially it was saying Britain's now back Remain over Leave by 10 points according to this latest poll. Now, one thing to keep in mind is this poll does buck the trend. The other polls have it pretty much neck and neck, if not a repeat situation if we were to have a renewed referendum vote as what we had back in June of 2016. But this exclusive survey for the Independent by BMG Research showed 51% now back remaining in the Union, while 41% want Brexit. So certainly it's a much different vibe to certainly the ones, as I say, that we had been seeing of late. Whether or not this is a read across into the overall now economic impact of impacting the consumer, that is, going into such a sensitive period for consumers such as Christmas, when you're going to have to buy not only presents but more food than usual for your Christmas turkey and so on, and the price of these goods being more expensive in the context of having still fairly stagnant wages, so i.e. Your purchasing power has gone down. Whether or not this has had a concrete impact then on people's sentiment towards Brexit, now that we're seeing these negative real implications, has a part to play in this is yet to be seen. But certainly it was interesting. Once don't knows were encouraged to choose one way or the other, or excluded, the Remain lead actually rises to 11 points. Either way, it's the biggest gap since June 2016 vote. So quite interesting. One thing I do think, when I read this at the weekend, the actual survey data was taken right in the midst of the negotiations for phase 1 of the talks. So it couldn't have been more uncertain at that point in time. But obviously we know now she has secured that first phase to move to phase 2, if you like. So a couple things on Brexit. So let's just have a look at the pound while we're here, and make this chart a bit bigger. I mean, looking overall here on a daily continuation, I mean, this is the year to date. Let's just make this a bit bigger so we can bring in the referendum fall as well. Is, you know, although we're having the worst December comparative to peers at the moment, it's hardly a disaster from an overall perspective. The pound's still fairly comfortable levels. I mean, here we are trading a 33.50 at the moment. You know, this is a far cry from the 120 type handles that we were trading right at the low point at the beginning of this year. So it's going to be interesting. Obviously now things are kind of wrapping up for the rest of this year. I'm not really expecting too much new on Brexit talk that's going to really impact the market short term over the coming week. Albeit I'll be keeping an eye on Theresa May in Parliament, and there's an EU meeting happening later in the week. But overall, I'd say 2018 Q1 is going to be the real big one for the pound, because really it's within Q1, those 3 months, Jan, Feb, March, that the UK really needs to start bedding in this transitional deal, because overall it does need to be ratified across every European National Parliament, which is going to take several months in itself. And so the rationale would be, if there's no deal by come the EU summit, which is next scheduled for March of 2017, then you've got some real issues on your hand in terms of how the market negativity is likely to develop in the pound going forward. But looking on the intraday, I mean, we found some resistance so far at pivot. Just looking here, let's have a look on the 60-minute. If there's any interesting near-term levels. I guess really upside, looking more at previous low point on the 14th. So playing with the range from what we had from the end of last week, which really defines much of that range trade over the previous week. And we're about the midpoint of that at the moment, so nothing too interesting that's really jumping out at the moment there. Okay, a few other things. Oil, you can see, well, let me just show you the oil chart first. It's on the front foot this morning. We are up to 57.75. So just having a look, we got a near-term level of significance at R2, which is 57.82. That also being the high that was printed in the middle of last week. So 57.81 is a level of resistance to keep an eye on, and certainly that has greater significance over quite a few previous price points. So definitely as we come up to R2 here, I would be watching that level. So question mark then, why is oil rising? Well, certainly the corporate tax plan probably plays into this a little bit. If you're going to get greater economic pickup in US productivity on the back of this plan going through from Trump, and he can push forward on other implementation of other policies as well, and certainly this lends its hand to on the demand side of the equation. Then also you had this on Friday. This is where we had the shale explorers trimming their number of rigs by 4. This obviously comes every evening on a Friday. They've trimmed that to 747 last week. So American drillers rig count, it dropped for the first time in 4 weeks. Hedge funds have also increased their bullish bets on Brent to a record, and to a near 9-month high when you're talking about WTI, which is the contract that we're looking at. So some bullish positioning from some of the speculative positions in the market, allied to the US rig count dropping for the first time in a month, the tax plan going through. So certainly some positive factors here that have helped us get above the highs that we printed on Friday, and then up to test a key level here at R2 to watch as we go forward. Okay, so that's the picture with oil. Now, a few other things just to be aware of for the week, and I guess it's better if I just bring in the week in focus, so to speak. So this is what it looked like, or what it looks like. So today's pretty quiet, and we've got the final inflation prints coming out of the Eurozone. So normally when it's the final reading, very seldom does it have a greater market impact. But as we go through the week, there are a couple of other things to look at. So you've got RBA minutes, it's going to be overnight tonight. Then you've got one of the main figures that comes out of Germany, which is IFO business climate. However, keep in mind that these type of data points from Germany have been relatively strong, and so I don't really see any reason to think any different. I think it was, if I remember rightly, it was ZEW that we had last week that was still holding up. People, a little bit of uncertainty emanating from the Brexit situation, but certainly no negativity feeding into analysts and economists' forward-looking view for the German economy from the political uncertainty around the formation of the coalition government in Germany. So they were still remaining quite positive on things. And I'd expect businesses to remain the same in Germany, particularly when we had the PMIs last week. And Germany was putting in some really phenomenal numbers to the upside. So things very much performing quite well in Germany still. Elsewhere, housing data in the US, no one's really too bothered about that at this point in time. The housing market, relatively robust. But then you get your API oil inventories, which will lead us into the regular DOE ones we'll get on Wednesday. Mark Carney is speaking on Wednesday. Nearer the time, I'll give you the context and the topic and so forth. And this is the other Brexit event. You've got PM May in Parliament in the UK today. But then on the EU side, European Commission published their directives for Brexit transition. That'll be on Wednesday, so that could be quite interesting as well. Bank of Japan interest rate decision, it's coming on Wednesday night going into Thursday morning. Certainly not looking for any change in policy here, but I guess the context of accompanying comments, and Kuroda always has a press conference to follow that, and that will be going on when we come in the morning. Canada, for any FX traders, you've got your inflation readings and retail sales, and then for the US side of things, it's the final reading of GDP. You get your core PC numbers and fully fed. One of the other things to have a look out for, and this will probably get a little bit more news coverage, I'd imagine, as we go into midweek, you do have the Catalan election still happening. And although this is really taking a bit of a back seat comparative to where we were kind of 3 months or so ago, certainly this could provide complication if the vote results come out in a certain fashion. So again, we'll talk about this a lot more as the week goes on, and we get more information on latest polls and so forth. And then on Friday, wrapping up then the week, it's pretty much US heavy, personal spending, durable goods orders, PCE, a few other things as well. So fairly light calendar, not a great deal, not certainly after we had the kind of jam-packed week of last week with the central banks in particular focus, but I'd say things to look out for this week are really ratifying of the tax bill in the House and the Senate. We're expecting the House on Tuesday, the Senate I guess possibly Thursday. Any potential disruption to that happening, and certainly equities would be vulnerable to the downside given we've pushed to these elevated all-time high levels. As I said though, with the positive sentiment this morning, just keeping an eye on the DAX index at a fairly interesting level at the moment, which if can break more convincingly does open up potentially some more upside. German IFO on Tuesday, the UK Brexit situation to look out for from the UK side Monday, European side Thursday, and then the Catalan vote on Thursday. Kind of the main things that are on the agenda at the moment. Okay, gonna leave it at that. So any questions, I'll be in the chat room, just let me know. Otherwise, enjoy your day and the week ahead. I did send out the morning research this morning, and just to finish off with, I did send you out a research report about Bitcoin and cryptocurrencies. So any of those who are interested, ING wrote a pretty interesting report. So do have a read if you get a moment. One thing is, obviously, we had the CME, so the world's biggest exchange. It was SIBO the weekend before, but the CME have now officially begun trading Bitcoin futures, and this is what it looked like. So the difference being in terms of size, one futures contract on the CME is equivalent to 5 Bitcoins, whereas on the SIBO it's 1 for 1. Now this was the price action last night, so I know it looks like a pretty sporadic chart. That's because it was the first day this product's ever traded. So we went from a high opening price to a low. In about 2 hours, we fell 12% or 11.5%. If you were trading the futures on one futures contract, that would have been nearly $12,000. That's just crazy town. Not as crazy if you look at this on a 1 minute chart. You can see the liquidity that's going through this kind of contract, and there it is. The point being, you can't see it because there's hardly anyone trading it. Certainly overnight session when the market was selling off, quite a few people in the market activity, but certainly after that big push lower, things have broadly settled since then, and we've come back to retrace about 50% of that move. So Bitcoin futures now officially underway on the CME. Okay guys, have a good day. Thank you very much.